on some of these IT names on the charts. We also have Rajesh Bhosle, technical analyst at Angel One, joining us on the show. Rajesh, morning. Before we come to you, I just want to quickly take the conversation back to Samir, and we were talking about some sectors where one needs to be looking out for opportunities. But Samir, want your view on the metal space, the kind of run up that we've already seen, followed by a cool off period, and now once again these names like Hindustan Copper, Hindustan Zinc, they're trying to eke out some gains. Obviously, with this entire IT uncertainty and global equities once again taking a little bit of a hit, these safe haven names, they start looking more attractive, and then that could have a trickle down effect on some of the metal names also. What is your take on what lies ahead for the metal names after the kind of journey that we've already seen in the recent past?
Yeah, so I'm a little surprised that it's actually not surprised, but it's a little funny to say that IT is not the safe haven and metals is the cyclical industry is a safe haven. Anyways, having said that, no, I'm not as bullish on the metal counters from here on. Look, we've seen a fantastic run in the metals stocks because commodity prices have run up. Copper has run up. Silver has run up, because of which Hindustan Zinc has done well. Steel prices have moved up, and steel prices have moved up actually because of government protectionism in India, right? So we are asking for protectionism, and then at the same time we are telling the companies are saying we're making so much money. So it kind of a dichotomy and something sad that's actually happening, that the government is having to protect an industry that is making so much money, and eventually the end consumer is paying higher. Now, commodity cycles in general, whenever they run up, they're kind of, how do you put it, self-killing. It's like suicidal, right? The commodity prices run up, and that does affect demand to a certain extent for these products. And then, of course, the prices come down. And cyclical businesses to buy when the run-ups have happened and at much higher levels where valuations, on a trailing basis start looking a little more expensive, you don't make returns. So for me, commodities at this point is a total avoid. Yes, the stocks will probably rally more because, momentum is there and everyone wants to buy what is hot to make the quick buck in the market. But that is not what long-term investing is all about. And I do believe in the principle of long-term investing. So for me, these are sectors that you got to start taking money slowly, slowly off the table, keep booking profits, and find something that is attractive. IT, like which we kind of discussed, slowly start accumulating that over the next 1 year. I think you will make decent returns. I'm not saying it's going to happen immediately. Like I said, IT may continue to fall a little more. That's why don't go out and buy everything. But accumulate it over a year, you'll probably be seeing pain for a year. You'll say, my portfolio is not doing well. But 2 years from today, suddenly you'll be looking at it and saying, oh, I made a decent set of returns. So work as a contrarian sometimes when things move to extremes is what I say.
Okay, and Samir, what exactly do you buy within that IT pack? Do you buy mid-small IT, which are faster growing, say, for example, the likes of a Persistent? But again, you've not got that clear a revenue visibility, which Persistent maybe had 6 months back or was guiding for maybe a year back. I'm not so sure whether that guidance should actually be taken. Or should we look at the large cap basket, where TCS, Infosys, in terms of dividend yield, now starting to look extremely attractive, right? Nearly at least a 6-7 year in terms of attractiveness, looking at the best kind of numbers in terms of yields and cash flows to the market cap.
So I guess you can look at, creating a small little basket of it, of maybe 3 stocks, maybe 2 in the large cap and 1 in the mid cap. Sorry. I do think that TCS and Infosys are 2 counters which are very high on cash flow, dividend paying. Infosys is making inroads into data centers, and they'll get investments coming in from abroad because of the tax holiday that they have AI tools coming up. So that is something we like. Infosys, which you had an IT analyst coming saying they have already started moving. I've also been noticing that they are working on tools for the AI space. So that is something that one can probably look at also. Persistent, I don't have a view on. I think valuations are a little bit more stretched. I mean, we haven't studied in that great depth, so I don't want to comment on it. But Tech Mahindra is also something. So these are counters that one can look at. I would focus more on TCS, Infosys, Tech Mahindra. Tech Mahindra is not a mid cap, but it's much smaller than the rest of them.
Okay, let me also bring on board Rajesh Bhosle. Samir, stay with us. technical analyst at Angel One. Rajesh, let me bring you straight into the conversation with regard to IT in particular. How are you seeing that pack? Good time to buy? How are charts looking in your opinion?
Yeah, so I was listening to both Kunal and Samir, and I agree with them. I mean, the recent fall has been vertical, and in the near term, the pain may continue. So, as of now, wait, I mean, avoid catching the falling knife. If we see on the technical chart structure, Nifty IT has broken below ascending triangle pattern. So, I mean, we expect further weakness in the near term, possibly move towards 30,000 to 31,000 is expected. So avoid for now until we see a clear base formation or reversal sign. This pack is likely to remain under pressure. But once the IT pack comes somewhere around 30,000 or below that, some of the key prominent names like Tech Mahindra, HCL Tech, these counter had initially shown outperformance or relative strength in the recent performance. So this pack may continue to perform. So once Nifty IT slips below 30,000, try to accumulate this counter in a staggered manner.
Okay, so that's on Nifty IT. Let's completely shift the conversation away from the IT space now. Samir, when you were talking to us initially, you also spoke about real estate and cement. Now, another ancillary over there is this entire wires and cable space. We're seeing lots of news flow, lots of new entrants into this space. What is your outlook going ahead, given copper prices, the kind of moves you've seen over there, and also the fact that there are a lot of new players? Do you believe wires and cables is going to go down the same road that, let's say, cement or paints did when a lot of people got into the mix and there was consolidation? Is there anything like that you are foreseeing for this space?
Look, it's possible that similar kind of thing could happen in that wiring space. You're very rightfully said there are some large players getting into the space. In fact, just recently, Crompton Consumers announced that they will be getting into the wire space through a pilot project in a certain region. The simple argument is we are selling the lights, the fans, everything that connects to the wire. So why not start selling the wires? And they've already got their tie-ups in place, and they'll be launching in the next month. We know that there are a couple of the large players, Grasim is one of them. I think Adani is the other one. They're all getting into this. So competition is definitely going to increase. But at the end of the day, what you got to see is how the expansion of the market is happening. And I believe the market is growing quite robustly, given that the real estate space is seeing such traction. We look at the kind of pre-sales that are happening at the time of launch for so many of these projects. There will be growth, but will the industry go through a period of consolidation given the high valuations? I think absolutely it will. Am I going out to buy them right now? No, I'm not. I think you will in the next 6 months to a year, once all the new capacities come on board and pricing pressures come in, it starts working more on lower margins. You will get an opportunity to get a lot of these stocks at lower levels, like you did Asian Paints. Nobody thought Asian Paints from 3,600 would be available 2 years or 3 years down the line at 2,400, right? So similar kind of thing will happen, and I would advise a little bit of caution there. Yes, great growth space. I think companies will continue to grow, but valuations will be corrected.
Okay, Samir, on that note, we'll let you go this morning. Great chatting with you. Thanks for all of those insights. Thanks so much.
Thank you. Thank you.
Okay, then we are shifting focus, just addressing what the market is doing in the pre-open. Of course, early days right now, but it's a massive cut on the Nifty, where at least 320 points lower, at least on the spot right now. But I just want to address some of these earnings candidates, and we're seeing some elevated reaction to something like a PI Industries, a 10% cut on that stock in the pre-open right now. Cohance is also lower by 8.5%, and once again, you have your IT pack, Infosys, TCI, LTI, HCL, all seeing cuts between 4 and 8%. Hindustan Zinc right now is lower by about 4.5%, which is also the case with Hindalco. You have Persistent, Eclerx, Wipro, all of these are under pressure. On the flip side, it's Honasa Consumers that's perking up real well in the pre-open right now. It's up by about 4% on the back of very good numbers. We'll be talking about that and Senco. Good set of numbers from both of them as well. But let's talk about some of these laggards. Kunal, a chart check on PI Industries. The stock, yes, is improving right now. Of course, the rates are very volatile right now. It's a 7% cut as of now on PI Industries. Any view on the charts?
See, on the longer term charts, the stock is still at a strong support territory on the 3000 levels. I would sense that if in case the stock dips down back to the 3000 mark, it could be a double retest towards the major support. The last time the stock had tested 3000 levels was I think in the month of March, April 2025. From there, it had rallied back towards 4,200. That's almost like a 40% jump into the stock price. And then from 4,200, the stock has come back in towards a potential retest to the 3,000 levels. So I believe that this 3,000 mark could be a good support from a medium term to longer term perspective. And these are the times where the risk reward starts to look extremely attractive. So if in case the stock opens at this or comes close to this 3,000 levels, I think it's a good territory to go for a buy.
Kunal, your mid-cap picks?
So that will be a buy on Torrent Pharma. Now it's a very interesting chart because on the short-term charts, it's establishing a formation of a potential bullish flag formation. It's coming out of a consolidation on the daily charts as well as on the hourly chart timescale basis. So look out for targets in the range of 4,250 for Torrent Pharma, and stoppers could be kept at 39.60.
Rajesh, yours?
Since markets are under pressure, we are looking more on the heavyweight space, showing relative strength. Banking and financial space were doing extremely good yesterday, and we expect them to continue to reflect strength. So ICICI Bank yesterday ended on a strong note. It ended with a flag pattern, and also RSI crossed above 60. So we expect ICICI Bank to extend its up move in the coming session. So ICICI Bank can be bought with a stop loss of around 1400 with the targets of around 1490. Along with that, Bajaj Finance look good. Bajaj Finance, if we see, it has been trading in a range, but there is a small cup and handle pattern breakout. So Bajaj Finance can be bought with a stop loss of around 970. In the near term, target is expected around 1060.
Okay, so those are some of the picks